Hey, thanks for being here again this month. Good to see everyone. Don't forget, you can always check out our reference guide to our monthly charts on YouTube. If you're on YouTube, it will be in the description below this video. You can always check it out there because sometimes I fly through charts pretty quick. And if you don't know what I'm saying, that might be where you find out what you're missing. All right, is this Fed pivot in the room with us right now? That's a great question. I think a lot of people are asking it. Right now, when is the Fed going to pivot? And if that happens, will the market get back to normal? Will the environment get back to normal? Will the economy get back to normal? Hard to say at this point, but it's really questionable. I know the CPI numbers came out this morning were a little bit better than expected. So things are looking up today so far. We'll see where this goes. You just don't know in the future. But I know one of the things that the Fed still needs, as we've said before, is rising unemployment, and we're seeing that in the Twitters, in the Facebooks, in some of the other big names right now. So we're starting to see that in the tech sector. I don't know if that's going to spread to other areas of the economy, but we're certainly seeing it now. Okay, our long-term chart. Here we go. Got the laser pointer working great. Last month we were way down here. We were overstretched. I said we were certainly due for a rebound or bounce back up to the mean, which is back up to the blue line. It did do that, and now we're just kind of not sure. Is it going to break through? Is it going to just pause there and reverse like it did back here in May, or it kind of tried in September and then failed? I'm not sure. I'm kind of curious to see if we can get see some money flow pushing through that at the end of the year, because seasonally it's a good time. Typically after Halloween through November, December, early in the next year is usually fairly positive for the market. So I'd love to see that continue, but you never know. This has been an interesting year. There have been a lot of gotchas that come out of nowhere that are really messing with the environment. So we'll have to see where that goes. Money flow has been good, but it has been weakening. Last time we had this webinar, we had a fake out here and we're failing, but money flow did again go positive. Now our line is around this 200, where we think it's the market could run, and it did, and it has, but now it's starting to weaken. I don't know if it's going to keep it up or not. I'd really love to see the momentum stay, but we'll have to see where that goes. But so far it's positive but weakening, so I want to see where that goes. Sectors right now are +6 to -5. That's leaning positive. It's not great. I want to see more on the positive side. Usually in a good run we're pushed all the way to 10 or 11, but we're not there right now. So far, basic materials, financials, industrials. And that's thinking the Dow, which I never think about the Dow, but that's where the strength has been in the past few months anyway. And it's really unexpected, because I really don't, it's not an index we think about. We think about the S&P and the NASDAQ and other global indexes, but rarely the Dow is just such a small, not terribly relevant index to follow. But that, and then healthcare is positive. On the negative side, we've got consumer, discretionary, and communications. And communications, that's the Googles and the Facebooks. We talked about them. Well, the Facebook's laying off people, and so I'm curious if that changes their direction. But as of right now, they're in a downtrend for sure. The ADX is saying it's confirmed. Negative on the tech. I don't know if that's going to flip or change, but everything is positive. All the MACDs, it's kind of an early warning, and they're all positive right there. So I'm curious if this is running out of steam, because I haven't seen a lot this year run for that amount of time. And I'd love to see it run longer than it has. But another reason to think that this run might be slowing or stopping soon. I'm not really sure yet. All right, the sector rotation graph here is again the communications and consumer discretionary. They did not pass the weakening box. They went straight down here to lagging. The lagging is this bottom left corner. Everything else is holding up pretty well. It is pointing down towards weakening, but it's not weakening yet. We're still in the green box, and I like to see that. Energy had been in the green box for so long, and now it's starting to show some weakness, but it's to be expected after a run that it just had. Your financials, utilities, and real estate, which have been terrible. They have been the absolute worst performers, and usually those are more safe assets. When things are questionable, you want to go to those places. They've been hit harder than anything else, and it just doesn't make sense to me. But here they are, probably the most recent to join the green box up here in the leading area. So we'll see if that holds, or if that can run, or if that's just another fake out. All right, here again, the run up that we had, it really wasn't very big. When you look back to July, when we had that big runoff with money flow was behind it, and it really pushed up here really good before selling off. March was a little bit like this one. It was actually bigger. Right now, we had a run and then it's failing, and I want to see it hold this 21-day line and see if it jumps up. But it's hard to say right now. These arrows down here are very mixed. There really is no definite trend in place, right? When things are rising, you tend to get a lot of arrows in a row to kind of give yourself a feel for how things are running. And the green bars actually reference to what quadrant they're facing on the previous in the rotation chart, right? So green mean they're positive, but I don't know for how much longer. This is when they're weakening, and so on and so forth. So we're green bars are positive, a little bit mixed and questionable on the strength. I'm not sure where that's going to go, but I'd like to be optimistic for seasonal reasons, but we'll see where that goes. And finally, we said we're going to talk about election, have the election edition, and give you some heads up on things that we're thinking about. Currently, and where we've been the past 2 years, has been a Democratic president, Democratic-controlled House and Congress, and typically where that falls in the returns spectrum of different combinations of government leadership. And if the election that we're having just now, which it's not figured out yet, so I don't even know where this is going to fall, but likely will be somewhere between these two. Still a Democratic president, either it's going to be a Republican-controlled full Congress, or it'll be a split Congress. Either way, the likeliness of the next year or two returns should be pretty good for the market. And even though I know Will's going to talk about the lost decade, and I'm going to talk about that next month, in lost decades, you still get really good ups and downs, but it ends up over time not going anywhere. So you really have to be very proactive about where you are. But what I'm looking at now is going, okay, if we're going to shift from this box to one of these two, the expectation for the next little bit is going to be pretty positive. It's another positive factor that we're thinking about. And then finally, stocks have always gained a year after midterms, no matter who is in office. And that is awesome. It kind of matches what we saw in that last slide. The average gain is about 14.5. If it's Republican president, 14.8, or Democratic president, 14.5. This might as well be the same number. So going back to the last slide, that's really where we're expecting to push forward to, which would be great. I know 2010, we were coming out of the Great Recession. 2014 was interesting, but for the most part, it's been pretty good. And that's since 1950. Now, what's interesting is there were 2 negative years in the 30s, and that was because of World War II and because of the Great Depression. But that's a very different environment. The way the data is captured now is different. But since 1950 to the present, we've never had a negative year next year. So it's very positive for what's coming up. So I'd love to see it go that way, and we'll see where it goes. Well, thanks for being here this time, and we'll catch you next time. If you're on YouTube, don't forget to like and subscribe, and we'll catch you soon. Thanks.